Hello students, welcome back to JLD Academy Virtual Classroom. Today we are going to study one of the most important foundations of accounting. Our topic today is the principle of double entry. Now, let me ask you a quick question. If you spend 2,000 naira from your pocket to buy food, what happened? Your cash reduced, but you received food. That means two things happened at the same time. This is exactly how accounting works. In accounting, every transaction affects at least two accounts, and this is called the double entry principle. By the end of this lesson, you will be able to define double entry, understand debit and credit, apply double entry to transactions, solve WAEC style accounting questions. Introducing double entry. So what exactly is double entry? The double entry principle states that every financial transaction must affect two accounts. One account is debited and another account is credited. This ensures that the accounting system always remains balanced. The balance follows the accounting equation: asset equal to capital plus liability. If one side increases, the other side must adjust. Understanding debit and credit. Students often get confused about debit and credit, but don't worry, it is simple. Debit. Debit simply means the left side of an account, while credit means the right side of an account. But more importantly, debit and credit follows rules depending on the account type. The three account rules. There are three main account types. 1. Personal accounts. These are accounts for people or organizations. Example: Musa, bank, suppliers, customers. Rules: debit the receiver, credit the giver. Example: Musa gives goods worth 10,000 naira. Purchases account debit 10,000 naira. Musa account credit 10,000 naira. Meaning, we receive goods, so purchases is debited. Musa gave goods, so Musa is credited. 2. Real accounts. These are physical assets. Example: cash, land, furniture, equipment. Rules: debit what comes in, credit what goes out. Example: a business buys furniture for 15,000 naira cash. Furniture came into the business. Furniture debit 15,000 naira, cash credit 15,000 naira. 3. Nominal account. These represent expenses, losses, income and gain. Rules: debit expenses and losses, credit income and gains. Example: electricity bills paid 5,000 naira. Electricity is an expenses. Electricity expenses debit 5,000 naira, cash credit 5,000 naira. Practical transaction calculation. Let's solve some example. Example 1. The owner start business with 100,000 naira cash. Ask yourself two questions. What came into the business? Cash came in. What is the source? Capital. Owner investment. So the entry is cash account debit 100,000 naira, capital account credit 100,000 naira. Example 2. The business buys goods worth 20,000 naira cash. Goods came into the business. Cash went out. Entry: purchase debit 20,000 naira, cash credit 20,000 naira. Example 3. The business sells goods for 15,000 naira cash. Cash came in. Sales occurred. Entry: cash debit 15,000 naira, sales credit 15,000 naira. WAEC examination. Let's solve a WAEC style question together. Question 1. A trader start business with 200 naira cash. What is the double entry? Step 1. Identify account. Cash, capital. Step 2. Apply rules. Cash came in, debit. Capital provided by owner, credit. Final entry: Cash debit 200,000 naira. Capital credit 200,000 naira. Question 2. Furniture purchased for 40,000 naira cash. Step 1. Identify account. Furniture cash. Step 2. Apply rules. Furniture came in debit. Cash went out credit. Entry. Furniture debit 4,000 naira. Credit cash 4,000 naira. Question 3. Short answer. Define double entry. Double entry is an accounting system where every transaction affects two accounts, one debit and one credit. Essay question explanation. Explain the rules of double entry. Students must discuss 1. Personal account, 2. Real account, 3. Nominal account, and provide example. Let's bring this to real life in Nigeria. Many small businesses fail because they do not record sales. They miss personal and business money. They cannot track profit. If business owner understood double entry accounting, they could track profit, control expenses, detect fraud. This is why accountants are very important professionals. Career connections. This next thing connect to career shows as accountant, auditor, banker, financial analyst, entrepreneur. These professionals help organizations manage millions and even billions of naira. Lesson summary. Today we learned double entry. Double entry means every transaction has two sides. The three rules are personal account, debit receiver, credit giver. Real account, debit what comes in, credit what goes out. Nominal account, debit expenses, credit income. When you master this, you can understand all of accounting. Class challenge. Before our next class, try this. A business performed the following transaction. Owner invests 50,000 naira. Goods purchased 20,000 naira cash. Goods sold 30,000 naira cash. Write the double entry for each transaction. Motivational close. Remember, students, financial knowledge is powerful. The people who control financial record often control businesses and economies. Africa need honest accountants, ethical entrepreneurs, and transparent leaders. You can be one of them. Thank you for learning with JLD Academy today. See you in the next class. Bye.